Quant is displaying textbook chart patterns. And if you can understand and see these chart patterns ahead of time, you can see what any cryptocurrency is likely to do next. So today, we're going to do a deep technical dive from a chart pattern perspective into Quant. So let's dive straight in. So the main thing to note with any chart that you're looking at is it's driven by human psychology of fear and greed. And more often than not, a chart will move in a 5-wave pattern on the upside, followed by a 3-wave correction. It's called Elliott wave theory. It's one of the key fundamental things that you want to be learning because it's one of the most powerful things, especially in crypto, because the emotions are so raw. So today we're going to look at 3 things. We're going to look at pattern, we're going to look at price, and we're going to look at time. And so let's just look at this, right? So here with Quant, we've got this 1, 2, 3, 4, 5, right? We know that. It's pretty clear that this looks like a 5-wave top, mainly because we've had this big move to the downside. So we don't know what does this look like and what's likely to occur next. So my first question is this the end of a correction? And then we should anticipate a movement to the upside, all-time new highs, or recent highs at least, or is it simply the first leg of a correction? So here's the clue. So if you can see that this is a 5-wave structure, a 1, 2, 3, 4, 5 in itself, doesn't mean it's complete yet. This indicates that is a first leg down of a wave A, right? Because wave A is a correction. So when we're looking at this, a 1, 2, 3, 4, 5, this here, this 3-wave is typically an A, B, and a C. So this first move down looks like a wave A. So that indicates to us that we should anticipate the next move up, normally in 3 waves in itself, as a wave B, and then a final move down as a wave C. So that's from a pattern perspective. But how can we use more information to give us a higher probability to stack the odds in our favor? Well, then we can look at something called Fibonacci price. There's many factors that you want to take into consideration, but the most basic, the most fundamental is how much price movement moved up, like what was the range, and as a percentage, we do something called a retracement. How much does it retrace down? And the most common is a 50%. That's what this 0.5 represents. There's 50%, 61.8%, and 78.6%. Typical minimum, typical maximum. Well, first of all, though the price is close, it hasn't touched the typical minimum. So that indicates to us that this correction is not over, right? So we want to be really, really aware of that. The second thing is, or the third thing, should I say, is Fibonacci time. Most people are absolutely unaware of this, and it's often the missing piece of most people's business plans and trade plans is how long did it take for this 5-wave structure to unfold in terms of how many days, how much time did it take? All right, what most people don't realize is that most corrections, it's human psychology playing out. And these Fibonacci ratios are like magic. You know, it's not 100%, but it's close. It's like, it's the one of the, you know, there's no, what was the term one of my mentors used to say? There is no holy grail. There's no holy grail. But Fibonacci ratios combined with Elliott wave theory and some other factors is the closest thing to having a crystal ball. Most corrections take 38.2%. That's what this 0.382 represents of the move to the upside. So we can measure that time ahead of time in advance, and we can see this bar has not gone into this date yet. The date is the 11th of September. So based on probabilities, this correction is not over. So this is the most typical between the 11th of September and the typical end is before the 25th of September. So taking that all into account, if we just summarize what's likely to occur based on probabilities, based on you being in the casino, is that we're going to see a wave 8 of some sort. It looks pretty clear at the moment. We're more than likely going to get some type of wave B, which typically unfolds in 3 waves in itself, and then a third leg down. Something like this. And that would be my take on Quant. There are some momentum indicators that we can also take into account, but just be prepared that if we do see this rise, that it might not be the continuation that people might be waiting for, and that we might be getting one more leg down because this is a impulsive structure. This will probably be corrective, and then one more impulsive structure to the downside, right? And I like to keep things simple. I'm going to read it from my book, right? Actually, in fact, I'm going to finish today's content on a quote. By the way, if you want the chart for Quant, you can download it for free. You can get my trading view charts. Quite a few charts that I've got up now. One of them is Quant now. You see that over here. And we've added a few others as well. But Quant, what you see today, you'll get on the chart. You can also download my book for free now. Just giving away massive value, and it'll help with your mindset because 90% of the game is mental. So chapter 5 It's Leonardo da Vinci, and what he says is simplicity is the ultimate sophistication. Now, with trading, crypto in particular, there's a lot of news, a lot of fear, uncertainty, and doubt, a lot of FOMO, fear of missing out. And it's a very unique market because normally you don't have a secondary market for such young projects. And Bitcoin's only what, 2009? So what's that? It's like 13 years? Yeah. And with Quant, it's like what, 2, 3 years? So it's very, very young projects, which means the volatility is huge. But Fibonacci ratios, Elliott wave patterns apply the best when there's volatility and the human emotion is raw. So we can use that information to be 2 steps ahead of the market so we can plan and prepare. So if Quant is making that wave be up and we're anticipating another leg down, you can make a business decision if you're going to hodl through that, if you're going to take some profits, if you're going to go long, if you're going to go short. And that's the whole aim of the game, where you're becoming the casino. So you get the edge in your favor because the house ultimately wins. And knowing it's just stacking the odds, that's the best we can do to trade consistently.